Let's start the analysis for today with Aussie dollar. I haven't really had the time today yet to look into any one of these pairs yet, but nonetheless we will look into it as usual from top to bottom outlook. From top to bottom outlook, the very first thing that catches my attention is the fact that we had the bullish move for the last week. It broke above the trend line that we had, and nonetheless we have now a confirmed price action reversal because of the fact that we have a higher high compared to the previous highs over here, and that gives us an opportunity to look into two-sided market movement. First, because we are basically getting on weekly time frame towards the zero line on MACD bars. That gives me the opportunity that we will have a slight further bullish development, but then we must have another bearish reversal. So what we will do is that we will first look into daily time frame, look for opportunity to short, and then we will look for an opportunity to long the pair once again. So what can we expect from Aussie dollar? Let's take a look at this thing very promptly. At the moment, you can actually look and aim for longing Aussie dollar approximately from 0.73757 level, and you should be asking, why am I really looking into 0.7357 level? It's because of the fact that I'm looking into the historic background of the Aussie dollar, and I can see that there was a previous resistance here at this level where the market basically reversed back. So if today we are going to be seeing some kind of reversal or correction, it should be to the 0.7357 level. But nonetheless, from here, our targets will be initially to 61.8% Fibonacci retracement zone, which is 0.7466 level. And finally, last but not least, I will be looking into two specific levels for Aussie dollar. The very first thing that I'll have in mind is going to be 50% Fibonacci retracement zone, and it's going to be at 0.7525 level. And last but not least, final point and expected reversal point will be 0.7588 level. From this level onwards, I will have a pending sell limit. I repeat again, from 0.7588 level, I'll have a pending sell limit. Now, let's look into why I would really have a pending sell limit order at that level. So let's just go ahead and put it. You can see that when I put it, basically a horizontal line over here, we see that 0.7588 level falls onto the historic previous support level, which is expected obviously to turn into a resistance now. So nonetheless, 0.7588 level must be tested, and that would be the reversal point for Aussie dollar for us for this given moment. However, if we see that the pair is going to be reversing, there is also possibility that we could see some reversal from the given current level, for the fact that if you look on weekly time frame, the 9th of August 2015 weekly candle was a resistance level. It basically was a level that the market touched and reversed backwards. So we could possibly see signs of reversal from there onwards. Alternatively, what should you really look for if you want to long Aussie dollar? Well, the target that you should be looking into for long in Aussie dollar is basically just on 0.7260 level, and that's going to be the long targets once again towards 0.7588 level. Let's confirm it on hourly time frame as well. What could be expected? You can see that the pair is currently retracing slightly, a little backwards, and it's normal because of the fact that on Friday we had this 80 pips movement after the NFP figures for Aussie dollar. So it is completely understandable and acceptable, and probably the pair is going to go to 0.7372 level, and from there onwards we can see the retracement back, as we said, 0.7466, 0.7525, and 0.7588 level, the overall over here. Moving on to GBP USD. On weekly time frame, we can see if you combine the 2 weeks candle, basically last week and the previous week's candle, we have a reversal candlestick formation. Basically, if you bring them together, and if you were participating in my previous webinar about candlestick trading strategy, basically this is the candle's opening, and this is the closing. This is the shadow, the small shadow, and this is the long shadow. So nonetheless, we have a candlestick formation that is likely to be a reversal candlestick formation. So I would like you to be cautious on that, and nonetheless don't really weigh too much on the market yet. But this is just a previous idea that I can get right away in my mind. Moving on to daily time frame, we can see that the pair reversed from 161.8% Fibonacci retracement zone, which was 1.3830 level more or less. And at the moment, for last Friday's highest high, we can see that the pair found itself a resistance at 100% Fibonacci retracement zone, and that was basically at 1.4249 level. So what can we really expect? Well, as a part of our strategy for candlestick strategy, the very first thing that we can see is that the daily candlestick strategy over here is a sign that the market is going to be on continuation. This is a continuation candlestick formation. So we will be expecting the pair to make another high, just basically test 142.55 level in order for us to consider further bullish entries. And our further bullish entries should be targeted initially at 143.08 level, then 143.60 level, and from there onwards my main target will remain at 144.74 level, and it's because of the basically combination of these two trend lines that I have drawn over here. What other aspect we could really consider? If we move on to hourly time frame, we can see that the pair has been forming a very clear price action, bullish price action, that each time it makes a high, it makes a low, the following high is higher than the previous high, and the following low is higher than the previous low. And just like Friday's high was higher than the previous low, previous high, and so far today's low is still higher than the previous low as well. So what we will be looking for at this given moment is that possibly a test towards 141.44 level, and from here we will be looking for long opportunities, and our long opportunities will be to 142.48 level, 143.39 level, and as we said, 144.80 level more or less. Moving on to euro dollar. Once again, let's look into the market from a weekly time frame point of view. We can see that the pair on weekly time frame found itself a resistance and support overall. The support was found pretty much at 61.8% Fibonacci retracement zone, and just above the 61.8% Fibonacci retracement zone, we had the 20-week moving average, which also acted as a support level. You can see the previous week and the last week was kind of finding itself as a resistance level. The MACD is almost at the zero level. It's just slightly below the zero level, negative 0.002 level at this given moment. So nonetheless, we are still bearish, but we will be looking for possible bullish developments on weekly time frame. On daily time frame, we can see that the pair found a resistance just on 200 moving average, and that was 100% Fibonacci retracement zone as well. So we have 61.8 as a support and 100% as a resistance, and currently the pair is struggling to break above the 88% Fibonacci retracement zone. MACD just below the zero line. So far we have a higher high compared to the following highs or to previous highs. We have a higher low compared to the previous lows over here. But the price action is still below the moving averages. So on daily time frame, we are kind of mixed, and we can't really pick a trend at this given moment. On hourly time frame, we can see that the immediate support could be seen at 1.0940 level. So 1.0940 level, which is not too far from where we are now. Basically 10 pips difference. And if you move backwards, the main support could be seen at 1.0925 level. You can see over here. So nonetheless, we could still avoid long entries for now. If you want a long, you should look for a test and reversal once again back above the 200 moving average. Let me just change this to 50-hour moving average. You can see that the 50-hour moving average is going above the 200 moving average over here, and that's a sign that the trend is gonna be reversing to bullishness. Basically, each time moving average 50 and 200 crosses over, when 50 goes above the 200, this formation is called golden cross formation, and it's a very strong sign of a bullish development. You can see over here, whenever that happens, like over here, when it happened, the market went into bearishness. And another example over here, that when the market basically crossed over, the market went on bullishness. So that's the main bullish development that we have. So I'm gonna go and place a kind of an odd entry over here. I will look into longing euro dollar from 1.0870 level, and that will be a buy limit order. I will have approximately 60 pips of stop loss, and my targets will remain towards all the way to the level of 1.1355 level, which is 161.8% Fibonacci retracement zone. Now, moving on to gold, the best and the most profitable entries for last week. Our targets basically were hit mostly, because if you remember last week we set two main targets. First one was at 1279, the second one was at 1300 level. So the first one has hit, but we are still lacking the second target. Nonetheless, let's see what we can really expect for gold for this coming week. It's still, MACD is still above the zero line, bullishness. Moving averages indicate bullish developments, so we still are bullish. On daily time frame, just like on weekly, moving averages confirm bullish developments. we have on daily time frame golden cross formation still handling. So that's a sign that we will see a first bearish retracement and then see further bullish development. So that's what I'm convinced on. So if you ever see a gold touching to 1197, long it from there onwards, or to be more precise, 1190 level, because this is the level that it's likely to drop and then to reverse backwards. So this is the general outlook. Moving on to hourly time frame, we can see that there is a possible sell opportunity just below 1254 level. So if you see the pair breaking below 1254, look for short opportunities. Your initial target will be at this level, which is 1245, and then we will be looking for 1235. Sorry, 1239, and last but not least, we will be looking for the level of 1227 level, just somewhere over here. So this is the short opportunities. So I will be cautious for gold trading, at least until tomorrow. I want to see what's really happening, but nonetheless, this is a short opportunity that we can consider. Moving on to crude oil. Crude oil prices kept on moving on bullish side. We had a total development of almost $2 for Friday after the NFP figures and overall the market developments. We can see, and if you remember, we were talking that there is a major resistance at $34.84 level. So as soon as $34.84 level was broken, over here, the shift in the market basically got changed, because we had a price action development which was bullish from there onwards. So that being said, we are looking now into bullishness, but I wouldn't take any entry at this given moment. That's at least my personal view for crude oil. On daily time frame, you can see one main point over here, and this is the 50-day moving average. So we can see that 50-day moving average is at 3677 level, and 3677 level is almost well, let me see the high side. We are just 7 cents, or 7 cents below that level. So nonetheless, there is a possibility that we will see bearish development for crude oil, but I wouldn't place a call on crude for now. I want to see the confirmation first. Back on USD Japanese yen, we can see that the last 3 weeks we have been looking for 110 level and 114.25 level overall, and these levels have been very stagnant, very important levels for us. On weekly time frame, we can see that the pair touched that level, 114.25 level, and so far it also made a continuation candlestick formation on weekly time frame. But the MACD is below the zero line. Moving average, one is showing downwards, another one showing upwards. But nonetheless, it is the signal on weekly time frame is quite confusing. However, though, moving on to daily time frame, we can see that we have a clear bearish development. However, as we said, on weekly time frame, because we have a candlestick formation that shows a bullish continuation. So what I would do, and I would aim for, would be look for Friday's highest high, which was 114.26. And if you see a break above 114.30 level, I would look for bullish opportunities. In 40 pips for the first target, 75 pips second target, and third and main target would be at 116.65 level, and that would be my final target for USD Japanese yen. Back on your requested Turkish lira, USD Turkish lira, we can see, well, we gave an analysis a couple of weeks, I think 2 weeks ago, and we were talking that there is a possibility that the market will be on bullish move. That gave us approximately 260 pips, but it didn't really work perfectly great. So let me just try to look something over here. Okay, I think this is the correct one. So I just put a trend line over here to define the support of it on weekly time frame. On overall for the pair, we can see that although for some reason the USD Turkish lira went on bullish over the last week, the Turkish economy and the political structure is not really doing well. So fundamentally, I'm confident that Turkish lira should be depreciating, should be losing value. But so far it's quite stagnant. You can see that the market is touching 61.8% Fibonacci retracement zone, and it's also the trend line that we just drew. So I would say if you have enough equity in your balance, you can consider long opportunity over here. It is against the trend, but it is in line with the Fibonacci. So you can go long for Turkish lira. Just make sure that your stop loss is below the 2.8850 level. I know it's more than 260 pips, but you know, when we are setting stop loss, we set it in order to avoid making loss. And if you are going to be longing USD Turkish lira from here, your target should be all the way to 2.9640 level and 3.01 level.